Great morning to you. Right, that, Pat? Love that, Pat. Love it. Listen, everyone, hope you're well and doing great. Rested up from the weekend. I hope you all had a good weekend, enjoyable weekend. And we're going to do what we do today. And we're going to be discussing markets. We got a lot to talk about because it's been a couple of days since we've been together. I'm looking forward to this session and just continuing to uncover nuggets, doing our best to stay in front of the macro, have fun with our TA, but most of all, make sure that we are executing on our mechanical strategies. There, like it was mentioned earlier inside the chat here in the intro, that there's a lot of tension out there. I wonder if that's from the Ethereum chart, because kind of when I was posting this little bit of a very steep ascent on Ethereum able to print new all-time highs over the weekend. We were looking at Tom Lee once again on the bid. We saw Sailor on the bid. That didn't really affect price too much, but we definitely saw a whale dumping, sending the price of Bitcoin down $4,000 in an instant. And truth be told, market continues to absorb these large dumps. I like those large dumps in so much as that what I see is when you're seeing very old coin being dumped on such a large scale and the market absorbing it, that means that listen, taking profits is awesome. Who knows what size wallet? Actually, we do know what size wallet they have and how much coin they hold. And like for lack of better accurate reference, they sold. Oh, it's so bad. But I was gonna say 1/5 of their coin, and they got a lot more coin, and they could do it again. But that's a healthy. You know what? That's healthy. Taking profit like that after holding for over a decade. That's what people are here for. And yes, I believe, you believe, and most believe that the price of Bitcoin over the next decade is going to appreciate a lot more. But hey, you know what? It's part of the game. But what I like about that is you're seeing, we used to talk about Bitcoin. You would see like Bitcoin moving from weak hands into strong hands. I don't think that OG is a weak hand whatsoever. I think that was a rightfully earned distribution, but it is going into stronger hands, hands that are, let's say, theorized, speculated that they're going to be holding for the next decade, and if not longer. And it's a beautiful thing seeing the redistribution of Bitcoin across the network. Ethereum, what's going on? Did it have a little bit of trouble over here? Is there anything to read into? Is it true that I don't know if it was that particular? I don't obviously don't care so much for those things. I'm more interested on, first of all, the most important thing to me is our strategy and executing our strategy, the psychological aspects that go in that, the continued advancement and improvement. And then I have a great passion for the markets, and I love being able to work out the nuances of the macro in real time. And I didn't know if that's where the tension's coming from, because right now there seems to be a deepening divide, and a lot of people are looking for that market crash to come. A lot of people think that, I don't, I imagine that largely for many, 4-year cycle behavior plays a large role, and we're right to the window. One thing that's missing has been that euphoric rise. A lot of people think that that's about to come. I am not one of them, but a lot of people think that euphoric rise is about to come. They're going to get ready. They're going to be distributing into that rise. They're going to hold back. Wait, 2026 bear market ahead. Going to go ahead and buy the bottom and do that. It could happen. I mean, I don't I don't see that happening at the moment, but just so everyone that's listening here knows, most of you know me for a long time. We all know each other for a long time now, going on 5 years. I will pivot in a second if presented with any type of data that warrants it. Right now, I am not seeing anything that points to an imminent crisis and or recession. One thing that people might be looking at and or talking about is the old reverse repo getting close to being drained here, and something that that I expected was going to happen coming into, I think, March of 2024, right? I think that was my estimate. Now, listen, it's not all wrong. From this point of view, when reverse repo had $2.2 trillion of reserves and the US Treasury was getting ready to go ahead and offer all those new issuances after the debt ceiling debacle was finished in 2023, I said that the majority of that money is going to come from the reverse repo, and it did. But I thought soon thereafter it was going to be drained. And look how much further the cycle is extended. And that's the name of the game. They're trying to extend the cycle as far as possible. Now, the last time it was drained over here in 2018, it took roughly 18 months to get to September until it took, from the last time it was drained, it took roughly 18 months to get to September 2019, where there was an actual crisis. And that crisis, the markets didn't crash or anything like that. The markets had crashed, if you remembered, or corrected. Corrected, crash, it's a big difference. The markets had corrected in the fourth quarter of 2018. They were down 30%. And the president at the time on December 26th was like, buy. And that was the low. And that remains the low. And then, like, repo drain, no crisis. People think as soon as the repos drain that there's an imminent crisis. I mean, there's a greater chance of some type of liquidity crunch and crisis for sure, right? But last time, again, it took 18 months. There was a crisis with the overnight LIBOR rate spiking 9-10% overnight, and they had to come in and they had to stop QT and they had to start that balance sheet expansion, and risk melted up and continued to move very favorably. So there was a correction here. There was a correction right over here, by the way, as well. We just had a 30% correction in April. That was a major correction. And we looked at how often in the past, in the last 100 years, how often after a 20% correction was there another 20% correction. And the most generous that we could be in looking for, it's hard to define, like when that correct. I tried to go from the very top to the bottom. I didn't go from the bottom to the bottom. And like 11 months was the earliest, and it seemed to have happened twice. It's very rare. It not that this time could be different. This could be the first time, for sure. This could be the first time. Or this could feed into a lot of people's belief that, in 2026, we're getting ready for a bear market. That's 11 months out from April, for sure. That could be. And I hope if we enter into, number one, a recession, or number two, there are some that think we're in a silent recession. I agree with that from many different aspects. There are many people out there, they're struggling. Most people's head is like just below water, and they're trying to just breathe. But that's a different story. That's one. That's one. See, look at the buy Bitcoin at 33K. So this is great. I just want to, me, I'm like, breath, 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 take the nuggets as they come. And I said we got a lot going on today, a lot to talk about, and this is one over here. We're gonna start over here, and at all times, is it safe to assume a major correction in Bitcoin? In the past, the whole mantra that we gave was, in bull markets, accept at least a 30% correction. And that was like 30% correction. You got to be ready to buy, and 30 to 40% is quite normal. And during bear markets, up until the last, it's been expect a 85% correction. Last market, 75% correction. Was that a sign of diminishing downside volatility, or was that a one-off? And are we getting ready for, remember, the only thing that keeps me up at night is a deflationary bust, slow motion deflationary bust. You saw it happen in China the last few years. if that were to happen, I think that would be bad news for Bitcoin. Outside of that happening, and I don't, is it going to happen at any point in the future? I imagine a lot of people think it's getting ready to happen right now, but we'll weave in all this stuff. Um, Obviously, my premise is that adoption continues to grow. We've entered early majority. You could see the adoption being a factor by price making a new all-time high prior to the halving, not after the halving, as in every previous cycle before that. You could also see the like FTX, major centralized exchange, blew up. BlockFi blew up. Celsius blew up, and Bitcoin corrected less than in past bear markets, right? Nothing blew up over here when Bitcoin was at $6,000, and then like just December 2018 imploded 50% overnight. That like nothing blew up or broke. Massive, massive blowouts over here, and Bitcoin corrected less. I would argue that was a sign of the state of adoption taking place in Bitcoin. And moving forward till today, my expectation is that the bear market is is probably going to be significantly diminished compared to the previous diminished bear market. Now, I think that it's safe at all times to be ready for like the like especially there are a lot of people I think that like borrowing against Bitcoin. I see it across my feed everywhere, and some people are like, you know what, I like the direction this is heading in, and I think I'm gonna wait to next cycle, whatever cycle is for them. Like just say 5 years from now, I'll say that I imagine that the lenders are going to be like, probably my bank will offer me the potential to to borrow against my Bitcoin, and I feel more comfortable there. But I see Strike now offering borrowing against Bitcoin, and I see a lot of people doing it. And I think that you should at least be prepared for, you know, I would say a 75% drawdown, but I don't see that. I have this line over here, and this line is a parallel channel that's set off the tops. It's quite arbitrary. I don't see any structure to it personally. And I think that I have to bring this down a little bit. But why is it going down like that? Bear with me. Huh. Oh, that's just the trend line. Bear with me 1 second, y'all, because I just want to do this. And you know me, when I want to do something, I can't let it sit, and I got to do it. So I'm finding right there. I'm going to draw a parallel down, and there you go. That's más bueno. I'm going to put it down to there, and then I could get rid of that parallel. And yeah, I know that during the BitMEX liquidation loop, we traded below it. Again, we didn't come close to it below there. I think it's arbitrary, this line. I don't think that this line over here, there you go. There's your 33K Bitcoin. Whoop, whoop, boop, 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 boop. 72% correction. And I think that, like, and I guess this is being framed for someone who is borrowing against their Bitcoin. I don't know what the loan to value ratios need to be. Is it 50% or is it 70%? Either way, like, I would think that you're at risk of losing your Bitcoin, but if you were borrowing against your Bitcoin, I expect 30% corrections within bull markets. So I'd at least be waiting for a 20-30% correction. And then I would be figuring, I would make sure that I had a plan in place to probably, through cash to pay off that LTV as you got closer to there. But I don't see that happening over here. And of course it could. And I don't see a crisis coming, but one could be here tomorrow. And you never know. And I think that's safe. And again, I place the risk of something like that happening in the foreseeable future, in the next 12 months, throughout 2026, the next 18 months, closer to about 10 to 15%. That's pretty low. You know what I attribute? And I just wanted to do one more thing over here and just draw a trend line, a simple trend line. Simple trend line would have saved so many people. So there's a trend line that's coming off of that December low. It hits the body of the global lockdowns. That was quite an unforeseen event. Not many people saw that coming. Now, I remember we were live every day. And I remember in February, we saw it coming. And I remember while we were extremely bullish, we pivoted ahead of the field to extremely bearish to ride down the market crash. When the markets were crashing, everyone out there except for Eric Townsend on Macro Voices was bullish. Markets crashing. We were early. We were on the right side. We swing traders became position traders to ride down the move. And then I remember off the bottom, trying to spend a couple of weeks trying to like still major uncertainty out there, trying a couple of weeks to get the rise out. And by April, we were just buy only, forbidding any selling. I know the last time the markets crashed, when I have the meme comes from the markets are not crashing. The last time they crashed, we were there on the right side. I hope we're able to do it again if it happens again. It's not happening right now. That's for sure. And not only were we there, we were early. We were early last time that happened. So not look, no one that's quite a thing. Um this angle of this trend line though, which comes off of the December 2017, the body of the global lockdowns, 2022 washout FTX, Celsius, BlockFi. That over there is right around 55,000 Bitcoin is cheap. But more importantly, that's a 50% CAGR right there. That's a 50% CAGR angle right over there. And you all know that why the 4-year CAGR of Bitcoin currently coming off that 2022 bear market is rather low. The average CAGR is significantly higher and a lot closer to that 50. And then, of course, now you're seeing it a lot closer to the 80 and the 80 over here. I'd say overall, 50% CAGR is right on time. If you're waiting for the 33, you know, that might not come. 55,000 Bitcoin is cheap, you know. I think that's a pretty good look. And the risk is two risks. Number one, here's that. This is a 60% CAGR. This is not a 50% CAGR. That's a 60% CAGR. And the risk, and 60%, by the way, I showed you like these 350, right? Back over here, that's 80. Over here, that's 80. This is 60. Seems to be about right. This suggests that you might only have to the summer of 2027 to buy Bitcoin under current price right over here today. Now the risk is this. This is the greatest risk. And listen, I think that this sustainable channel that price has currently been in over here, I think it could break at any time. I think that the odds of it breaking lean towards the upside. And if it breaks to the upside at any point in time, that's when I'm going to be laser focused in looking for that sell impulse coming out of it. Because I think that even though price are expected to accelerate to the upside on the breakout to the upside, the mean reversion is going to be sharper than normal. I think easy then at that point in time, you could have roughly around a 50% drawdown on Bitcoin. 40 to 60, right? 50 is in the middle. I think that the probability is high there. Is the probability of a 40 to 50% correction on Bitcoin high right now? No, it's not high right now. It could happen, but it's not high at all. And could this break to the downside? Could this green line break over here? This 80% CAGR line that has held ever since March 2013 could break anytime easily. It hasn't yet. And until it does, I'm expecting it holds. It's going to break one day. It's going to break one day. Likely when it breaks, there's a good chance that the 60% holds though. That's what most people don't understand. That's what I've tried to illustrate for you. Very well. Let's see it here. Imagine a world breaks, 60% holds. Anyway, it could break and something could happen where like, because this is structure. It's not just lines out of nowhere that we could end up in a channel below it easily, easily. That could easily happen. Hey, I appreciate the questions always, MMD on Twitter. You always ask fantastic questions. Really grateful for that and being able to dig in deeper. I just like questions because questions lead towards thoughts and I mean we're trying to look for answers. The greater risk though right now than Bitcoin going to $30,000, which that's an outlier. That would be that's an outlier. The greater risk at this moment, though, would be that you don't have until the summer of 2027 to accumulate Bitcoin under $112,000. The greater outlier would be that you only have until, I mean, I'm trying to be generous, but a year from now. That for me is the greatest risk in the Bitcoin market today. And I don't see anyone else talking about it. Now, for sure, we could have something different this time. And for sure, this trend line could break. And that would be unexpected, but not unexpected at the same time. It's eventually going to break. There's no question about it. But it hasn't yet. And I don't know what suggests that it would break down now. Again, we're continuing to see the calls coming up into the 4-year cycle zone for that elevated price action. I don't think we're going to see it. So you're going to have two leaning camps coming up right now. One leaning camp is going to be looking for that. Now the cycle peak will that elevated euphoric action is going to happen later. It's going to happen in the beginning of 2026. And the other camp is going to say, well, no, that's the top. This is the top. And we're about to, there's that channel right here anyway. Let me just, right? There's our sustainable channel. That's the structure of Bitcoin that we love. If it breaks below this line over here, that's a major technical breakdown. That's a de-risk event. At any point in time, it happens. No question about it. If it happens, most likely scenario is that we're coming in and we could test as low as this. That, by the way, is from the top into there, about a 55% drawdown. Just some awareness thrown around over there. I think I like that. So that was a good little tangent that we went off. By the way, Bitcoin bull runs continues to be still in the market here right now. Ethereum continues to still be leading our positioning as it has for these last couple of months, currently up 24%. Cardano still holding 9% into profit, and Solana is currently in drawdown 2.6% into profit. We are seeing TQQQ continuing to hold and push over here, so close to an exit last week. We follow momentum. That momentum on TQQQ is still holding up, 36% unrealized gains. And Tesla has an enter pending long that could be confirmed at the end of today's session. Nothing else here is on the horizon, and that's our positioning right now. CTM algo dashboard showing Solana in that drawdown. Cardano. Sorry about that. I must have to refresh this page. I have to come back to that on the offline. And Tesla 1 hour, by the way, you can see already ahead of that long over there. And FNGU, momentum is suggesting potentially a return to kicking up, except this week, of course, we have things ahead of us like we have on Wednesday, the main event of the week. We have NVIDIA's earnings. That's going to be a big one. And then we also have on Friday, we have core PCE. That also is going to be a major event of the week. You have to wonder, or I wonder, do we just continue during this moment here following seasonalities? And this last week of August has historically been an up week headed into what is more of a downward chop through September. It is an election year, so we're just cautious now through the end of October. In presidential cycles, seasonality suggests coming through that they remain weak through mid-October. So again, just our we put out a video, and the video was titled coming into right. We were over here in the middle of July, and we put out like, have the markets come too far too quick? And we just talked about the seasonalities ahead of us. So far it's played out textbook. Is it anything different or a lot more of the same? So far it remains to be, or it looks like a lot more of the same. Even going back towards the 1998 bull run over here, you could see that last week of August it just followed the seasonalities, and then in September it cut back down. I mean, are things different until they're different, or is it a lot more of the same? Speaking of different and of the same, let's just take a brief look at this chart over here. A lot of the people are expecting 2026 to be either a bear market and or a crisis. They point to the 4-year cycle. I think that I'm doing a good job here of trying to just pull out the nuances between what is taking place here with the fiscal dominance and the monetary policy, and the differences in, the last 80 years compared to what's happening now. And just trying to, because it was someone asked in the comments here live, could we talk more about fiscal dominance? If you go on the Twitter, you could see a lot more of that nuance being shared regularly. A lot of people talking about this chart right here in the inverted yield curve as the reason why they expect an imminent crisis. Let's just take a brief look at this, and the yield curve has been inverted. Now I don't know if you honestly use March 2022, where it definitely dipped negative on the monthly, but then it reverted, if you remember, and then ever since June of 2022, we've had an inverted curve. Now, historically, the average between an inverted curve and a recession has been 16 months. Seems I don't know. We're 2 years, so we're a little past the average. That's different, but that's not maybe unusual. Let's say this. Let's say. I think that it's important to look at what happened over here as well. And over here, the curve inverted, and then people talk to about. So, well, right after that, we had a recession. That recession was like one of the shortest recessions on the books. April 2020. People didn't realize because the markets were screaming up in April. But afterwards, they told us, like, I don't know if it was in June or whenever. They were like, oh, yeah, back in April, you had a recession. And people were like, oh, yeah, the yield curve inverted and there was a recession. And I was like, yeah, and they locked down the globe to get it. And had they not locked down the globe, risk was keying off and teeing off. I don't know that would have happened. Could this happen now? Is there some type of event like a lot of people pointing to aliens, they're serious. They believe that like the governments are going to try to pull like their aliens are invading us, therefore we need to print a bunch of money. I think they were going to try that. They were trying to do that, but because of the lockdowns, it woke too many people up. And when they tried running that playbook in 2023, everyone was like, you remember the aliens in Mexico? They released the mummies, and we're like, what is that, from the Egyptian tombs? Like, that's, everyone's on to Project Blue Sky. It's not happening. Is there going to be something else? There's always the worry that there's going to be something else. There's always the worry that there's going to, and there will be. And last time that something else happened, I know that we were early in seeing it and positioning. And I know outside of Eric Macro Voices, nobody else was there. And that same way out of it. Remember coming out of it? Oh, there's going to be an insolvency event. This is how these things work. I'm a macro expert. All of the doomers and boomers, not boomers, all of the doomers and gloomers were completely bearish until the major portion of the recovery had taken place. By the summer, people realized we got that wrong again. you know. Um, if it happens again, I don't know that I will be on the right side. I hope that I'm on the right side. If people are talking about a crash right now in 2026, I think one of the best things to do is go back to April, mid-April, and look, were they bearish or bullish, right? Remember that, and then after that, go to the end of April, beginning of May, and see were they bearish or bullish, because there's it's a lot of people love when people are like, this is going to happen by this time. A lot of people really, because it's easy. It doesn't require having to put the work in. It doesn't require having to digest all of the new nuance, the data, the ever evolving and changingness. And people like, but you have to say, did did they participate or did they miss the most recent run up? Because there's a difference between being momentarily cautious and bearish as the markets get spooked in the beginning of April and come off 30%. And there's a difference of realizing when those repairs are taking place and positioning yourself on the right side. If you're following someone who thinks that we're going to be extremely bearish in 2026, we'll first find out some type of reference point and then go from there. Again, if that unfolds, I hope we get to be there. Um, am I saying this time is different? Well, I'm saying this time was different. I know that we got the recession, but again, it caused them locking down the globe to get there. So this could have potentially been an inverted yield curve that did not trigger a recession, but the length of this one is surely different. So I wanted to look back over here and find out, like, in the past, and inverted yield curve, and another time it had been inverted for such a length of time. And brings me up, by the way, just showing you my journey over here. This is coming from June of 2023, and they were expecting that recession to come by Thanksgiving. Just going off historicals. But what they're talking about is this time different. This time is unique, and we're just coming off that massive stimulus from the pandemic. That again, rates right now are elevated off of that. Let's talk about being early. October 2021, rate shock incoming. Everyone says no one expected it. We talked about a rate shock incoming. So you can't say no one expected it. And, you know, with these rates elevated, you're looking at markets for the last 2.5 years have been rising. Obviously, the offsetting effects from these high interest rates and the length that it's taking them to actually have an effect on the economy is different this time. And not only that, potentially the Fed is soon getting ready to actually begin cutting. So anyway, is this time different? Is this much more the same? This time is the same as it was during a similar situation in history. And we have to go back towards the 1940s to get there. So it's not really different. It's actually a lot more of the same, but from a different period. And then, well, was the yield curve inverted during that time? The yield curve was not inverted at that time because they were doing what? Yield control curve. Could you imagine a world where in the foreseeable future, now I can't put a time on that, and I tried to make it clear that these things take a lot more time than I thought here, than most people believe. Most of the cycle is extended as long as possible. A lot of people are always looking for, they see something, they want it to happen right now. Could you foresee a point in the future where the US Treasury actually begins yield control, especially on the long end, right? Uh, most people most people see that coming. So is this actually a lot similar, again, from the aspect of what would have been inverted yield curve for an extended period of time in the 1940s to what we're experiencing now? That's the connection that I'm trying to make over here. Could this be correct, where we are on an imminent countdown to alien invasion and that window's between September and October, and then this like Venus aligns with Mars on January 7th, so that's a good date for the market to markets are not crashing right now. I don't see anything right now that points to a crash to come. So we're going to keep going here and try our best to sincerely work it out and stay in front of it without getting sensational. Right now, expectations are that, you know, we got a whole big narrative about the shift in dynamic of AI. And again, ultimately, it's going to lead to increased productivity. I really believe that. I've seen it firsthand. I've seen what a good dev could do with those tools in hand, and people are learning more and more. Um, Look, right now, we're looking for like just caution. Seasonalities are weak through presidential cycle, post-presidential election through the end of October. That remains to be our posture. As it is, with this weakness that's ensuing, or these seasonalities that are ensuing, we remain at the very top of a deviation coming out of a 20% drawdown. The one that we align with happens to be the only one that the prior 2 years had 20% plus gains on the S&P 500, just like this current one. Now, that one did happen to lead towards the dot-com bubble, right? Could it happen? Notice over here, right over here. I mean, here's another one though. The curve inverted in April 1998, right? When you're looking at that drawdown that we're looking at right over here, you could see the curve had inverted. There was a recession, there was a major crisis, but it did happen roughly 18 months later when we hit towards the peak of the dot-com bubble burst. Oh, one other thing that I want to bring into this conversation today. I think it's a good one. Right over here. I said the thing that keeps me up at night is something like this happening. And look over here. M1 peaking, right? Bounce all the way drawn down. Has it bottomed here? Chinese M1 impulse continues to accelerate. So do Chinese markets. China is a driving liquidity force for the globe, whether or not it was 2009. Now, of course, 2009, the Chinese were not alone. We saw obviously the Federal Reserve and the birth of QE just coming off of that in December 2008. But the Chinese, massive liquidity burst. 2015, Chinese, massive liquidity burst. What did that set up, by the way? That set up what? The 2016 major accumulation channel into the 2017 bull run. Now, throughout this, Fed tightening, monetary policy tight, Chinese global liquidity going deflationary, the way out. US monetary policy extremely tight, rates way elevated, QT running. What are the markets doing? Now we're moving to a position, Chinese liquidity, it's beginning to align. It's becoming very favorable. They export all of that liquidity to the globe. What's happening with the US? The US is on perhaps the verge of soon loosening their monetary policy. Interesting, right? People think that, because of past 4 year cycle, that means the end is. I don't know. I'm seeing it different. Obviously, I just want to be able to articulate it all with you. Just I only like for me, I have a genuine curiosity to learn, and there's not a viewpoint that I don't consider. So why would that be a black swan though? That, like, if anyone could help me out here of why that would be a black swan, if they were to do that anyway. I want to understand why would that be a black swan, or how and which way would it affect markets? I don't know. I want to know though, because I want to know always which way I'm seeing it wrong, but that just seems to put more pressure on the Ukraine to actually come to come to the ultimate agreement of ending this war. Anyway, that's weird. I would like to know. I don't see it. I would like to. Um so major driver of liquidity, Chinese is going from that deflationary slow motion burst, which if it happens in the US, that's my biggest worry and concern, and that would be bad for Bitcoin. Now, is it going to happen in the future? Is it happening now? Do we see it come? I hope that if it comes, we're able to be in front of it and see it, and also know that this isn't going to be a slow motion like liquidity crisis that they're going to be able to go ahead and print their way out of. This is going to be something that's going to take many years, and it's going to like be a slow motion deleveraging event. I hope that ahead of time we're able to see that, because everyone that just assumes that we're about to hit a euphoric blow off and then a crisis, they're going to buy the bottom of the crisis, and then well, what happens if it's a slow motion deleveraging event that takes time? You gotta play it right. But we're seeing right now Chinese liquidity becoming very favorable, rebounding. It's going to help global liquidity at a time where the Fed's monetary policy is getting ready here potentially to shift. And throughout this whole time, it's been fiscal policy, fiscal dominance that has helped move up the markets. So there we are. Right. So the reason we monitor 4-year cycle behavior so closely and have such a good read on where it ends, the zone it ends, and what is in case it does. Like we don't have a crystal ball. We don't know what happens in the future. We want to be able to make sure that we're able to navigate it. Does it require a black swan in order to take place? Cutting into a recession, you know? Ah, there's nothing right now that there's nothing right now that suggests that we're in recession. Nevertheless, there are people asking today, are we in a recession right now? Right? We looked at, next quarter's estimates for GDP, Atlanta Fed, currently at 2.4%. I'm sure, and rising. I mean, there's nothing that suggests that we're headed towards a recession right now. What we are seeing right now is the attempt to engineer actually stronger and hotter growth. We are seeing inflation beginning to kick up, and that's a worry. But that worry is not into the future. And that stagflation for me becomes a worry in the future, right? We continue to see earnings rising, like earning like beats coming across that's going in the right direction. We watch of any signs of things beginning to turn and fall apart, but the only thing holding us back here today has been monetary policy, and monetary policy seems that it's on the verge of taking a turn upwards. Of course, we watch the job markets, and that's a concern, and it's trending the wrong way, but we're still not there. We're still not at a point where it's signaling recessionary sirens going off. And listen, you're on a wave, and the idea is to ride that wave until it comes out. Most people, there's Peter Lynch says that more money is lost looking for corrections than in recessions. And I think that's really appropriate. It's really difficult for people to stay on the right side. We look for it. We use things like our mechanical systems, like liquidity. You know, Ethereum right now has been flying, and at a time when the Ethereum Bitcoin cross was at its peak low, everyone had given up on Ethereum, and then all of a sudden our mechanical system has us long, flying trade, consolidation, flying trade. Like, guys, everyone missed it. Everybody missed it. That's the truth. If you're trying, like, mechanical system all the way. I think that listen, the Fed began cutting in March of 2022, and they engaged upon their quickest rate cycling hike. And you could see that the markets have been markets have not really paid much attention. And now the Fed is beginning to potentially loosening that monetary policy, as far as they need to stop QT, they need to begin lowering rates. And when they do that, yeah, likely the chances are, if the economy is able to pick up steam and run hotter, and the Fed is lowering rates, that's gonna definitely cause inflation to go higher. And there's already signs that inflation is already beginning to, we talked about that. We called the peak of the inflation, but then it took like 4 or 5 months longer than I expected to roll over. I called the peak and I expected it to go like this. It remained there for a long time and then finally rolled over. And then we said, well, the next wave is going to be even higher. But that next higher wave is not coming until the Fed is forced to go to the printer. And I'm not talking about just balance sheet expansion. I'm talking outright QE. So people say that's never going to happen again. So right now we're coming off the bottom and we're just starting to, like, I don't think it's going to be like this. I think it's going to be like, if they're able to run the economy hot, you're going to see inflation going up. But it's not going to be as quick as you expect. It's going to be going higher, but it's going to take a while. And I don't know if that's 18 months or what it is, but it's going to be a lot longer than the most. And then, you know, Trump ran all of those tax cuts to be really conducive to growth in the first couple of years. That puts the brakes on things later on. And, if you're going through, what happens when you accelerate growth? Eventually you run out of steam. And when you're running out of steam and inflation's then like at its hottest, that's going to be a problem. That's going to be a bit, but is that problem something I see within the next 6 to 12 months? Not yet. Is that problem, out there further? Maybe. I think the most important vantage point to look at right now is what happens in the midterm elections and which way that goes. That's going to be very important for the markets and what happens next. It's an unknown right now, and I don't like we can't follow polls. Obviously, we have no idea what's going to happen or anything like that. All right, everyone. Thanks for being here. It is an absolute pleasure to work alongside all of you, and make sure that we stay humble, that make sure that we use our skills to absorb everything, to think differently. The only reason we're here is because we think so differently, and not get caught up in what our own hypothesis is, what my base case is, or what I believe is going to happen. Like, things will ultimately wind up a lot different than whatever we perceive is happening today. So we have to have the ability, regardless of what we believe is going to happen, to make sure that we're able to pivot to what's happening in real time. The last time it happened, it's happened 2 last times. I could point back to, right over here, bullish, very bullish over here. February, very bearish. Through March, April, very bullish over here, and then having to de-risk right over here. Everyone, thanks for being here. God bless you. Nice. Good way to start off the week. Good way to start off the week. And it's just Monday. Big week ahead. Wednesday is the main event. Friday, core PCE. I'm watching. The market's watching. Everyone's watching. And then nothing easy about it. Guys, we still have the headwinds of all these seasonalities for the next couple of months. There's a lot of fear. Is there a lot of fear? Is that fair to say? I don't know if that's fair to say or not. I see a lot of fear about what's to come in 2026. Um, Here we are. Here we go. Together to the summit. CTM. God bless you all. Have a beautiful day, everyone.